The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 24th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the market, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in at any time at 877-927-6648. Internationally, 727-445-1044. Well, let's go ahead and get this show kicked off here. I see the Russell 2000 just turned mean and green out there. So let's go check things out on this wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 88 points. She's traded 16,343. S&P is down 9 at 1912. NASDAQ Composite off 10 points at 44.93. Russell 2000, as I said, just turning green out here, up 56 cents. Yeah, the DAX closed down 250 points. The FTSE down nearly 100. Gold is up 15 bucks right now. Silver's up 4 pennies. No movement in it. Light sweet crude up 39 cents. A lot of movers to the upside. You've got First Solar up 8.5 bucks, 14%. Adeptus Health, ADPT, up 17%. That's up 7 bucks and change. Credit Acceptance Corp up 7 bucks. John Bean Technologies up $7. Lithium Motors up about 7. Papa John's Pizza has a little pepperoni on it. They've got they're up 10%. Running right into resistance, so they're up $5. To the downside, it is Amazon off 13 bucks. You've got Chipotle down 9, Advisory Board down 8.88. Oh, that's good luck in Chinese number terms out there. Priceline is off at $10. Alphabet Soup, Google, that's down about 8 bucks. Avis Budget Group, that's down 7.50. But first, let's start with what are the markets doing? What are the areas that we need to be focused on? And it really boils down to just one chart. I hate to say it. Because can it really be this easy? For the moment, it pretty much is this easy out here. And this is our favorite chart now. And look, I can tell you all the reasons. I can give you all the points in time, which is a plethora, which is plenty of them, where light sweet crude and the stock market, the correlation, just don't even pay attention to it. However, and unfortunately, or fortunately, depending on how you want to look at it, that's not the case right now. The top portion of the chart, just simply the 30-minute chart, just so we can have some data up here. The 30-minute chart here for the ES Mini. Bottom panel of the chart, it is light sweet crude, the same time frame, 30-minute of the chart. Now, what we also have on here, we've got these different horizontal lines, blue and red, going across my screen. The blue ones are the daily TAS market profiles. Thank you, John Logan, for providing us with those market profiles, because they're the invisible but visible when you watch us here at TFNN. Levels of support and resistance that you and I want to pay attention to and watch. We can see the ES Mini right now. It's trading at the level that is most comfortable on a daily basis for both buyers and sellers. Buyers say, hey, I don't mind buying here. Sellers say, I don't mind selling to you here as well. There's two other spots on that chart where buyers and sellers like to hang out. The snipers right now, and we haven't seen price get up there, but that would be at a price point of 1943. we're well aware. That's I said the sellers, right? The sniper sellers, the buyer snipers out here. They're down the front line. They're down at 1883, and they're like, hey, I'll buy all day long at that level. Now, I believe that anybody would be saying I'll buy all day long as light sweet crude, the bottom panel of the screen, does not close below 3063. That's the bottom blue line on my screen. That happens to be its TAS level of support, the bottom of its box out here. Now, the red lines represent market profiles as well, but those are the 30-minute style out here. So what we can see that was taking place this morning as price was moving down, from about 3 o'clock in the morning in a fairly healthy way out here. If I were to put up a short-term chart, you would see it. Light sweet crude was moving down. The ES mini was moving down. Light sweet crude got down to its level of support the quickest. It was down there at 9 o'clock this morning. Our markets opened up, the floodgates opened, the ES mini moved lower, nearly got down to the 1883 level, didn't get all the way down there, but light sweet crude never budged by closing below its level of support. It was just simply test, adios, sayonara, see you later, I'm taking off. And in fact, it took off with the ES mini doing just a bit of movement out there. And then some numbers came out, inventory numbers came out, light sweet crude continued to motor on up, and of course the ES mini came off of the bottom. Now, that's the 30-minute chart. You and I, we always take a look at those patterns, price relative strength, the seventh wave, the A to B equals CD, Gartley buys, butterfly buys and sells, and so forth. And if you take a look at, this is at 2:30 this morning, this is taking a look at the ES mini, this is a 10-minute chart out here. And if we just simply start our count from the high that took place at 2:30, we use that as our swing point and move all the way down. What you had at the 10:40 time this morning, you had a seventh wave, and you had a big old key reversal session. So we know that the markets were pushing lower into the morning. We know light sweet crude was saying, I'm rejecting the lows out here. You get to a seventh wave in the 10-minute. That is set up, by the way, with regard to its market profiles. Complete bullish formation out here. And the markets moved higher. Where do they run into resistance? Now, on a 10-minute basis, and we're going to switch different time frames out here, but on a 10-minute basis, it's a pretty darn looking bullish chart out here. It's bullish until you were to see it close below 1900.75 out here. You've got a new market profile, that new demand area that formed on our chart here. It formed at a higher level than the prior one. It says that there's a possibility that we have a move, a continued bounce that's moving up here. That's what the 10-minute chart says to us. Back to the ranch out here, and we take a look at the 30-minute correlation between the ES mini and light sweet crude. We can see that the point of control, in essence, is where the ES mini has run into resistance. So we've already covered that. And again, that price point, 1907 point, we'll call it in a quarter, or 1907.50. That's where a price has run into resistance. If you see price move above that level, let's call it 1910 at the moment, then you could actually see price move up inside the ES mini up into the 1943 level. However, what you need to see that's going on in conjunction with any kind of move like that is you'll need to see light sweet crude at least start moving up to 33.46. Probably would have to take out 33.46. In this case here, you'd have to say it really has to take out 33.80. So we'll call it any close above 33.80, 33.46. Then you can see that come to fruition. That is one possibility. And what you and I want to do here is we just don't want to. We want to check our emotions at the door. It doesn't really matter what we are in from a trade perspective, but let's just leave our emotions at the door. Come take a look at the charts, see what patterns are out there that are reliable, and read what it is they're communicating to you and I. So at this stage right now, what the markets need to do in order to rally, other than put a rally cap on, they have got to get light sweet crude to get more giddy up and go, to move beyond the 32 price that we're at. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 128. S&P is down 13. Let's break apart our ES mini. Let's take our 30-minute charts out here. We can do it for each of the equity futures contracts out here. But very interesting. We got a couple different patterns out here. Number one, you can see the descending price channel out here. By price channel, we're just simply using the open or close of a candle session. We're trying to find at least 3 of those. So along the top and along the bottom, I think we've got a really nice descending price channel inside the ES mini. We can see that price has tried to get above that channel 2 different occasions. That has run into resistance out here, the most current one during the session that we're in right now. So I feel very good about this as being the descending price channel, the level where we have buyers and sellers where they're hanging out. Buyers at the bottom, sellers up at the top. Plus, we've got those market profiles that also provide us with information as well. Now, as the market was moving lower this morning, let me go ahead and get one of my tools off to the side here. Let me do this. Let me turn that off. Let me turn off the channel lines out here. In fact, let me get rid of the TAS profiles. In fact, I'm going to go ahead and so what the market was doing between the swing points. Let me just go ahead and I'll delete that and I'll just go ahead and do it live on the air. No reason. So I'm going to go ahead and we're going to measure our expansion of swing points out here. Now, the swing points that you and I are looking at right down here at about 10 o'clock in the morning on the 19th of February. So we're going to go from that low all the way to the high that was put in here at 1:30 in the afternoon. This was on room 222 on February 22nd. So from the low to the high, from 1898.50 to 1943.75. If we just simply took that number, that difference, multiplied it times 1.272, subtracted it from 1943.75, that would give us a price objective of 1886.25. Now, what price actually got down to this morning was 1886 and 3 ticks, 1886.75. Now, as it was doing that, so we've got the expansion between a set of swing points. What we also have out here, let me do this. What we also have is the A to B equals CD down pattern, right? You get your A point out here. That's the same high that we looked at the 1943 level. I'm going to use this swing right here. This is the logical one for me at 3 a.m. on February 23rd. You have a little retracement out here into 8:30 in the morning on February 23rd. And, oh, it looks like I grabbed the wrong thing. So that's not going to work. But let's try to see if I can do this properly. That didn't work either. Give me a moment. I know I can do this. I know I'm that little engine that good. There we go. Got the A point, the B point. Now we get the C point. And what we can see is that we had a 1 to 1.278. A to B equals CD to the downside. You had a 1.272 expansion. What that sets up is a butterfly buy pattern. Now, it doesn't set it up as a butterfly buy pattern until what? That's right. Until the cavalry arrives. And we already took a look at that on the previous chart. Let me go ahead and get rid of the A to B equals CD pattern. We'll go ahead and take a look at it once again. So we know the patterns that are out there. And we had the cavalry arrive right here. Right there. 10-minute chart, you had a 7th wave move. On the 30-minute chart, you had a key reversal session. What do you need to have a key reversal session? Which is not a Japanese candlestick. This is a Western tool out here. It's a great Western tool. You had a bullish reversal pattern, a bull sash. You had the key reversal session. You need 3 things. You need a market to be stretched. Hey, you can't get any more stretched than a butterfly. You can get more stretched than a 1.272 by going to a 1.618 expansion, but you can't get any more stretched than that. So that's condition number 1. Condition number 2 is that the high and low of the prior bar needs to be exceeded by the current bar. Hey, you had that happen. No question that between the time period of 10:30 and 11 o'clock, that exceeded the prior day's candle. And condition number 3, you have to get it closed only by 1 tick. In this case here, you had it by way more than 1 tick in the opposite direction of the trend. So you had a butterfly buy pattern. Now, like every Gartley buy, every butterfly buy, you've got 5 potential outcomes out here. Outcome number 1, I believe, has already been fulfilled. Now we've got to go back to just simply our normal retracement levels out here. So we're going to go from the high now down to the current low, and we're going to see that that first level was the dead cat bounce, the 0.382 retracement. Is this all she wrote out here? A price move up into about the 1908 level inside the ES Mini? Well, you know the answer to that just as well as I do. That's all she wrote, unless you've got light sweet crude that's going to decide to go ahead and motor on up to 33.46 at this stage of the game. And take a look at a 30-minute chart here for light sweet crude. I don't see anything that is in its way from being able to motor on up to 33.46. So what does that mean? Well, what that means, if that's going to happen, then the next level inside the ES Mini is going to be your 0.618 retracement level. 1922 would be the number where things would head to. So we don't have to necessarily worry about the, what did we have, 1943 as a number. You know, 1943, we take a look at this 30-minute chart, just simply gets you all the way back to the swing point high from 1:30 in the afternoon on February 22nd. That would be outcome number 4. But right now we're dealing with outcome number 1. To see if it can break right that trend line. Now when we put that channel line out here on the screen, it makes all the more difference in the world. If you break above that channel line, then that says what? That says that price moves higher. Now the positive, or the negative I should say, is we've got a nice little rising price oscillator out here, but it's below 0. So what I can say to you unequivocally is what we have going on here inside the ES Mini on a 30-minute time frame is nothing more than just a counter trend rally. That doesn't mean that the counter trend rally can't move higher, because it can. But it's got to take out that 1908 level. We have the same patterns out here on all of the 30-minute time frame charts. Now, if we were going to pay attention to the NASDAQ, the bears would be saying, oh no. The bulls would be saying, oh yes. Why would they be saying that? Because the NASDAQ, if it's giving us a clue, now it made the same 1.272 expansion. That was at about the 4,089 level. That happened to also be the bottom of its descending price channel out there. Same patterns. It made an A to B equals CD to the downside. It's a butterfly buy pattern. You had that same little key reversal session out here. But right now, and this session here doesn't close for another 5.5 minutes or so, but we can see that price is breaking above its descending price channel out here. So it may be the NQ that is giving us a message out here. Let's take a look at the 120-minute time frame chart just for the heck of it, for you know what and giggles out here. And what we can see on the 120-minute time frame, hey, it's also dealing with another area of resistance, its own time frame market profile high, and that's priced out at 41.43 and some change out here, and you were trading at 41.46. So trading above that would also be what we will call short-term bullish. So those are the numbers we're paying attention to inside of the NQ. That's looking at a 30-minute chart. That's looking at several patterns. That is also looking at the 120-minute time frame out here. Now, let's go switch over and take a look at the daily time frames. Let's go step things up just one notch out here. Let's go see what we're looking at as far as patterns and profiles and things of that sort inside the NQ. Well, let's go ahead and punch this up on our screen. And what we can see here is that today, what we had was a brand new profile day. So it's got a nice little birthday, with today being the first day. And we can see that price this morning inside the NQ tried to bust below the brand new daily profile, which is priced at 41.21. You are at 41.44 as we speak right now. The center of that box is 41.49. So it's running right up into a level of potential resistance, another 5 points higher. If, in fact, the NQ can clear 41.50 is what we will call it, then you would anticipate a move to 42.34. So what does all that mean? Depends on what you're trading out here. But when we come back from this break, let's go take a look at some other charts. Let's go try to put all the pieces together for your viewing pleasure. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Before we went to that break, what we were taking, actually during I think the first segment, I happened to mention to you that the Russell 2000 had turned green out there. The index had turned green. Now, the chart that you're looking at on my screen out here, the top portion happens to be the Russell 2000. It's trading at 10,012 and 29 cents right now. The bottom portion of my chart out here, this happens to be the Russell 2000 divided by the Russell 1000. Russell 2000 being small caps, Russell 2000 being small caps, Russell 1000 being large caps out there. Now, why would Stevie go ahead and divide one by the other? Well, the reason is, the theory is that when you are in a bull market or in an uptrend, the Russell 2000 is going to, the small caps are going to lead the large caps out there. It's a great little signal tool. Normally, you don't want to show the correlation between the Russell 2000 up top and the correlation of the percentage on the downside, but that's how I've got it right now. And what we can see here is that we can see that this has not turned to the downside, right? Russell 2000 we know is a weak link in the marketplace, just absolutely a weak link out here. But and we can see that it's been making higher bottoms out here. So it's been making higher bottoms, even in the face of the Russell 2000, moving down today. The Russell 1000 moving down today. The Russell 2000 still outperforming the 1000. It has to make you say, it's got to make me say, something to think about. I hadn't looked at this chart here for the last several weeks, and decided to go ahead and punch it up on my screen earlier. And actually, I was surprised to see what I saw. It actually says, this would lend credence to light sweet crude's probably going to move higher. Our markets are going to continue to bounce higher out here. But if you see that turn down, that's going to be a pretty good warning signal. Turn down and then take out a previous low when we take a look at this ratio performance out here. But that's what the Russell 2000 is doing in comparison to the Russell 1000. And it is certainly worth tracking out here. If we go take a look at the ETF itself, the IWM, to see what it is doing. Now, let me just go back to this chart here. We'll pull up the IWM. Right now, it's just off. So it's turned just slightly negative out here. But let's take a look at what it actually has done during the day out here. We can see that price had, let me just do this. I'm going to turn off the profiles for the moment. That way it'll spread the screen. There we go. And we can just take a look at volume. We see you still have a rising price oscillator, not above zero, but you got a rising price oscillator. So that's more bullish than it is bearish at this stage of the game. We can see the price has pulled back. So far, you've traded with 21 million shares. That gives us a end of day projection inside the IWM around 35 million shares. Now, where this was moving back into, we took a look at this yesterday. We're looking at it again today. This thing had most recently broke out at this gap here on February 17th. That had 41 million shares. So that's 41 million shares versus a pullback of 35 million shares. So the gap has been tested, and it's been tested with light volume out there. So that's actually supporting a market that wants to at least not move lower out here, right? You want to scratch your head. But that's what the Russell 2000 is communicating to you and I. And the Russell 2000 is outperforming the Russell 1000. Interesting. Hey, if we go take a look at the advanced decline oscillators of our three indices that we track, that would be the New York Stock Exchange, still above zero. So that's actually bullish. Composite, still above zero. It's at 108.86. That's still bullish. The Dow, though, has a slight problem, just slightly below zero. One issue as we speak right now. So it's basically at the zero line. The VIX index, what is it doing, right? We got to go through that checklist too. Where's the VIX index trading? Well, when we say where's it trading, we want to know where it's trading in relation to its 50-day exponential moving average. That happens to be priced at 21.91. You are trading at 21.77. Yeah, the market's moving lower. It's down, right? Got the S&P's off 13 points. But the volatility index is not confirming, a further downtrend. Now, the different story. If it closes or trades above 21.90, which it did during the day, it's been up to as high as 22.87. But we're talking about where's it trading at 1:34 in the afternoon as we speak right now. So it's as long as the VIX index does not close above 21.91, I can make the case. Now, I can't make the case. The market's going to make the case for you that it's not ready to move to the downside. So that's what the Russell 2000 is communicating to you and I. That's what the volatility index is communicating to you and I. That's what the advanced decline oscillators are communicating to you and I. Hey, all holy hell can break loose 5 minutes from now. But until that happens, we've just got to go with the read that we've got. And we know the light sweet crude pushed down, test level support, and held out there. So hopefully that puts it all together for you. Now, what is it that's really going on inside the marketplace? Well, actually, you know what? I'll do it during the break. It's 3 minutes from now because I don't want to waste your time while I'm trying to open up charts. But we want to go to the longer term trends and charts out there. One other thing on the Russell 2000. Let me pull this chart up here. You know, when the Russell 2000 made its bottom here recently, which was on the trading session of, February 11th, we saw that price was moving down, doing less relative strength out, less relative weakness, I should say. Nice bull sash on the February 12th, and, you know, it's moving higher out here. It looks pretty good. Now, is it going to be able to get above the February 1st swing point? I don't know. That's really going to be its target out here. And that target, by the way, is going to be 1037.30. And you're trading at 1,011. So about another 22 points to the upside is likely in the case of the Russell 2000. Longer term, though, you know, the market wants to move lower. And the question just becomes, where is it that you put your trade on to the downside? Now, talk about putting your trade on. I'm not even sure how that even transitioned into what I'm about to say, but I just went for it. If we take a look at Goldilocks out here, it's up 19 bucks, trade out at 1241.70. I still am in the camp that this was a blow-off top on the trading day of February 11th. And I know I'm like one of the only people in that camp out there. But I have to admit I am a bit perplexed out here with regard to what gold is trying to do. Had some conversation going on with one of my clients earlier this morning. I'll share that chart with you since I think I still have it out here. That's this chart. The top portion of this chart is the ES Mini. The bottom portion of this chart is the continuous contract for gold. That works for what it is that we're doing. Now, you might look at this and you say, hey, Steve, that cannot be the continuous contract for gold. It's moving lower. In fact, you've got it priced at a minus 1241.70. You're exactly right. What I did was I inverted the chart for gold so that it would correlate or to really prove what is it that gold is doing. Right, you and I looked at what the ES Mini is doing or the stock market is doing in relationship to light sweet crude, right? We'd be, even though I can give you years and years worth of data to tell you that correlation basically stinks and is no good. Right now, it doesn't stink. It's like it's a golden goose out here, and we do not want to look that gift horse in the mouth, so to speak. I think we covered that a couple days ago. So in this case here, what I've done is I have inverted the price of gold so that it would match the correlation as to what's going on inside of the index futures account. And when you take a look at this chart, with the exception of just a couple of short periods of time out here, this goes back, by the way, to October 15th, the correlation is really, really, really good, right? The market goes up, gold goes down. The market goes down, gold goes up. Very interesting. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So before we went to the break here, I was showing you one of those, cool correlation charts right here. We're taking a look at this. By the way, we're looking at a line chart. That means we're looking at the close of the session out here for the ES Mini. That's a daily chart, as well as the daily chart here for the continuous contract for gold. But I've inverted the chart for gold. Now, are you a believer that gold is going to go higher? If that's the camp that you are in, then you must also be, I'd have to say at the present time, you must also be in the camp that you believe that the market is going to go lower, right? Because that is clearly the trade that has been working and would continue to work. So, so the question I pose for you is, are you in that camp? And if you are in that camp, this is the thing that is perplexing and confusing to me. Now, what I'm going to first do out here is I'm going to say that with regard to being in that camp, you are going against the smart money. If we're going to go ahead and take our clues from the metals contract. Now, this is silver. I'll go ahead and pull up the gold contract. But the silver one is giving us the best signal. Now, if you're watching us, I've also got this is the continuous contract for silver that's on my screen. Of course, we know silver hasn't been doing much other than running into a descending trend line against a weekly chart that you and I are looking at. It's the bottom part of the chart that's important for us to correlate to what's going on the top portion of the chart. Now, the bottom portion of the chart is the weekly net short position of commercial traders. They're presumed to be the smart money, and let's face it, they are the smart money. They provide us with great signals to anticipate. They are the economist of what's going to happen in the future with regard to the prices of metals out here, because what they do is they take positions. Now, you and I have to measure those positions based upon a net short interest. So we take a look at more or less net short out here. If you take a look at the bottom right-hand portion of my screen, you can see that as of last Friday, they had gotten into a more net short position higher than they have in years out here. And as price inside the weekly chart is running right into the resistance. Now, I would have to say, are you also a believer that gold's going to move higher and it's going to leave silver behind? Because if you believe that gold's moving higher, the market's moving lower, and it doesn't care about silver, well, that's the camp you'd have to be in. I can't buy into that camp. Look, we know that I know in the way that we have traded the metals out here, we've paid attention to what commercial traders are doing. So commercial traders have taken positions, and they anticipate that the price of silver is going to fall. So if high-ho silver is going to fall out here, you know, it would make sense that gold, too, is going to fall. So let's go with the fact that we've got this correlation. So if gold is going to fall, that would say what? That the markets ought to move higher out here. Again, perplexing. Now let's take a look at what's going on inside of Goldilocks out here. We take a look at gold and what commercial traders have been doing out here. You know, commercial traders were the ones that were down at this less net short position. This was back here when my clients and I took several positions in the marketplace inside of gold. We did it back here in 2015, made just simply a killing. We did it again back here in 2016, in the early part of 2016, and we used this as a guideline. We used other signals to go ahead and enter, but we used this as a guideline. And let me tell you, the commercial traders have been coming off of their less net short positions in Goldilocks in a huge way. You know, and Friday's report was as of the Tuesday. So, you know, they've been stepping off of that gas pedal. They are headed in the opposite direction of the belief that gold is going to be moving higher out here. Now, they can get to a much higher net short position than they currently are. And on the bullish side, look, with regard to that trend line, as trend lines go, we know that gold broke through that trend line, came back and tested it last week. Even this weekend, it bounced off of it. And that is an absolute trend line pattern that says you're moving higher. I know that. I cannot sell you on something different than what I absolutely know to be true, but I cannot ignore the bottom portion of this chart. And I cannot ignore what the silver chart. And it is why I hold that position that what we saw inside of gold back here, we go actually take a look at from last week. And look, I may be just totally wrong on this, and I will admit it when I am. But at this stage here, I still contend that February 11th was a blow-off top. Was a blow-off top out here. So we'll see. So the reason why I point that out is because so many of you are in different mining positions out here, and I'm not trying to convince you one thing. I'm just presenting the data. I'm just simply, you know, I'm just, you be the jury, you be the judge out here, whichever it is you want to be. I'll just simply provide you with the evidence inside of the market. So we see another little trend line here. Take a look at the current contract for gold. But, you know, so why am I perplexed? Because I'm anticipating that the markets, if we take a look at the trends out here, this is really trying to put it all together for you, because you might be saying, where the heck are you going with this, Rhodesy? And I would say, well, if we take a look at the trend lines out here, and we take a look at, so here are six different indices. Upper left hand is the Dow, center is the Russell 2000. Dow is below the long-term trend line. Russell is below the long-term trend line. NASDAQ Composite has not broken its trend. That's the upper right. Bottom left, the transports. You're sitting right on the trend line. They've had a counter trend rally right up to the trend line. I'll show you a chart that says that's it for their move. They're about to head lower. They already are heading lower. The New York Stock Exchange below the trend line. The S&P 500, you know, it's not out here. But basically, what the charts are communicating worldwide, if we go take a look at what's going on worldwide, we can see that the charts all over the place are below trend lines. Now, the DAX is below a short-term trend line. The FTSE, you know, it's packed it in. The Shanghai, it's packed it in. The Hang Seng, it's packed it in. By packed it in, the Nikkei, it's packed it in. What I mean by packing it in, it's below the trend lines. You break long-term trend lines, it says you're going to go lower for months to come. It's not like it's a one-and-done kind of a deal out here. So the trends are saying that trend is over with, unless it was a false break. And so coming up through this Monday, so today, tomorrow, Friday, and Monday's trading session is really important in order to be able to confirm that message. Back to the shack out here, and if we take a look at the Russell 2000, right? We took a look at the Russell 2000. I'll blow it up on my chart out here, and we can see that prices, you know, still below that trend line. And what does that say? That says if you don't get above that trend line, it says more likely than not you're headed to the 856 level. You're headed back to the bottom of the level where the consolidation breakout began, back to the 2007 highs out there. If it gets back above that trend line, boy, that would then say, okay, the markets are going to move higher. Gold is going to go ahead and move lower. I can, you know, that correlation that we're seeing right now makes all the sense in the world. Yeah, this looks like a hammer candle, by the way, on a monthly basis, but you break the trend trend. I'm going to give the until you get back inside the trend. The trend is your friend. In this case here, this trend is moving to the downside. So that's where I'm perplexed, because when I take a look at these trends, what I anticipate is that the next move is to the downside in the markets, not to the upside. But then I've got to say, okay, this correlation here, not this one, but the correlation between gold and the markets, that's going to have to totally bust apart. Just likewise as well, if these markets are going to move lower out here, that says that the light sweet crude has got to bust through at least the bottom of this profile, 3063, and continue heading south. Because this correlation, until it breaks out here, you have to assume that this is the pattern that you and I have to take a look at out here. So hopefully that stitched it all together for you. And if it didn't, I'll try again tomorrow. Just kidding. We have one more segment left. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
For all you overly bullish gold folks out there, we took a look at, so I've given you part of my secret sauce. It's not my secret sauce, but this is, so what I like to What I like to do is just simply sit down at the charts, take a look at them, and say, what is it that they're communicating to you and I right now? What have they communicated to us in the past, right? You know, how do you know where you're going unless you know where you've come from? What correlations are out there? Are these correlations, have they worked for how long? So on and so forth. And when I took a look at what the smart money, presumed smart money, look, they are the smart money. You want to call them anything other than the smart money? They are the smart money. They get it right. They got it right with regard to gold making the bottom, silver making the bottom. They got it right with regard to myself and clients being able to go ahead and get into long positions there. So if they were right there, how can I say that they're wrong now? They're not wrong now. It's just a timing issue in trying to put it all together. Now, what we looked at was you know, so the question would be, which I'm just going to answer for you. Somebody had to ask that question. Well, okay, so gold's going to go higher and silver's not really going to do much. Really? So if we go back as far as you want to, because the top portion of this chart here is silver. They're both in blue lines. If you want, I can put one in blue, one in something else. It doesn't matter, right? The bottom portion of the chart is gold. They're both the continuous contract, so we can go take a look at the data. You can see the directional correlation. It is inescapable. It is here. The gold is not going to go higher and silver going to go lower. Hey, it might do it for a short period of time, just as it did back here in February 2014 until about March of 2014. That was February 25th through March 14th. So, yeah, I can do it for 2-3 weeks, something like that. Okay, I get that. But, you know, is it silver that points the way or gold? There aren't a whole lot of divergent patterns is the problem out here. So I'm not going to make the conclusion one way or the other which one leads. What we know is that these guys go to the dance, and they can do the tango like no other out here. So that says if you absolutely believe, positively believe that the metals are moving higher, then these guys are just smoking. They must be just camped out in, I won't even, you know, Colorado at one of the, you know, at the pot bars or something out there. And maybe they are. I don't know. I just know that in the past, and we got this trend line out here, it just says, look, what it really says, no matter what, is use stops. It doesn't matter to me which side of the trade you're on, just always use stops. You might interpret this data differently, which is cool. I'm interpreting it this way based on how I've used it and what it historically has meant to us. And this just says that I am absolutely Paul Revere riding through the halls of TFNN airwaves out here and saying, be careful. Because there are, just as everybody back at the bottom, when nobody would buy these shiny metals out here or the miners and wrote them off, these same guys were saying, not so fast. I was having trouble back then because that was before we knew that Janet Yellen was coming out to raise rates back in January. And these guys, just to put it in perspective out here, okay, and try to put your mind back there. These guys back in January, let me get my cursor out here. These folks out here in January of 2015, they were moving to less net short positions. Less net short positions, knowing that the Fed was going to be raising rates, the dollar was going to get stronger, and supposedly that would go ahead and make metals move lower, right? No, they knew better. Somehow they knew what the heck was going on out here, and they got it right then, and they've gotten it right so many times in the past, and it's just, even though I'm belaboring it, yeah, I'm belaboring that because I think you need to know it. It's really that simple out here. Okay, so do me a favor, stay tuned, because our man David White, he's up next. He may have a different opinion out there, and that's a cool thing about all of us here at TFNN. We provide you our opinions, and with regard to what the markets are communicating to us. I would tell you what the markets are doing. Well, right now you got the Dow off 107, got the Russell 2000 still in the green out there. Very interesting, as Colonel Klink would say to Schultz. So, folks, have a wonderful Wednesday, and I'll see you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.